Students, welcome to APG Pathsala. I am Dr. Sanjeev Sharma from Government College, Nadaun, Himachal Pradesh. Today we are going to talk on module Significance of Financial Statements to Different Parties and Limitations of Financial Statements from paper Accounting and Financial Analysis. After studying this module, students may able to understand significance of financial statements to different parties and limitation of financial statements. Basically, financial statements are organized summaries of detailed information about the financial position and performance of an enterprise. Traditionally, the term financial statement is used to denote only two basic statements. The information contained in this statement is used by management, present and potential investors, lenders, short-term creditors, employees, customers, and their agencies to satisfy some of the different needs for information. Financial statements are prepared primarily for decision making. They play a dominant role in setting up framework of managerial decisions. These decisions are very important to all parties concerned, whether it is investor, creditors, bankers, government, trade associations, stock exchanges. The utility of these statements is dependent upon number of factors. The financial statements suffer from various limitations. Characteristics of ideal financial statements are shown with the help of a figure here, and it is clear from the figure that ideal financial statements depicts true financial position related with effective presentation, relevance. These are attractive, they should be easy or simple, comparable, analytical, brief, and promoteness. These are the features which must be included in an ideal financial statement. That these statements should be relevant, they should be attractive to the users, or that these should be easy to understand. Comparison can be done with the help of these statements. They should not be too much in detail, they should be brief and presented effectively. Depict true financial position. The information contained in financial statements should be such that a true and correct idea is taken about financial position of the concern. No material information should be withheld while preparing these statements. Effective presentation. The financial statement should be presented in a simple and liquid manner, so to make them easily understandable. A person who is not well versed with accounting terminology should not able to understand these statements without much difficulty. These statements will enhance utility of these statements. Relevance. Financial statements should be relevant to the objective of the enterprise. This will be able when person preparing these statements is able to properly utilize the accounting information. The information which is not relevant to the statement should be avoided. Otherwise, it will be difficult to make distinction between relevant and irrelevant data. Attractive. Financial statements should be prepared in such a way that important information is underlined so that it attracts the eyes of the reader. Easiness. The financial statement should be easily prepared. The balance of different ledger account should be easily taken to these statements. The calculation work should be minimum while preparing these statements. The size of statements should not be very large. Further, the columns which are used for giving the information should be less. So this will enable the saving of time in preparing the statements. Comparability. The results of financial analysis should be presented in a way that can be compared to various years' statements, and the statement can also be compared with the figure of other concerns of the same nature. The comparable figures will make the statements more useful. The Indian Companies Act has made it obligatory to give previous year figures into the balance sheet. The comparison of figure will enable a proper assessment of the working of the concern. The comparison is an important element and the financial statement should include this feature also. Brief. If possible, the financial statement should be presented in brief. The reader will be able to form the idea about the figure. On the other hand, if figures are given in detail, then it will become difficult to judge the working of the business. So, attempts should be made to present the financial statements in brief, analytical representation. The information should be analyzed in such a way that similar data is presented at the same place. A relationship can be established in similar data of information. This will be helpful for analysis and interpretation of data. Promptness. The financial statements should be prepared and presented at the earlier possible, immediately at the close of the financial year. It is necessary and very much useful for financial organizations, or business that financial statements are ready at the end of the financial year. Elements of financial statements include the elements directly related to the measurement of financial position are assets, liabilities, and equity. The elements directly related with the measurement of profit are income and expenses. The various elements of financial statements are discussed as follows. Elements of the financial statements are shown in the present figure. Elements include assets, liability, equity, income, and expenses. Assets, equity, and liability are related with the position statement, that is balance sheet. With the help of these elements, position of an organization can be assessed. So these elements are used in position statement, that is balance sheet. Whereas the element of financial statement, income element and expense element is used in income statement. With the help of income statement, profitability of business is assessed by comparing income with the expenses incurred for getting those income or generating those income. Correct profitability, profit and loss of the business can be assessed. So these elements, assets, liabilities, equity, income and expenses, are the basic elements of the financial statements. Assets. It is a resource controlled by enterprise as a result of past events and from which future economic benefit are expected to follow to the enterprise. An enterprise usually employs its assets to produce goods and services capable of satisfying wants or needs of the customer. Liability. It is a present obligation of the enterprise arising from past events, the settlement of which is expected to result in outflow from the enterprise of the resources embodying economic benefit. An important characteristic of the liability is that the enterprise has present obligation. An obligation is a duty to act or perform in certain way, and it may not legally enforceable as a consequence of a binding contract or statutory requirement. Equity. It is residual interest in the assets of the enterprise after deducting its liabilities. In corporate enterprise, equity is suitably subclassified in the balance sheet. Under each head, further details are provided. Income. It is increase in economic benefit during the accounting period in the form of inflows or enactment of assets or decrease of liabilities that results in increase in equity other than those relating to contribution from equity participants. It also includes unrealized gain. Expenses are decrease in economic benefits during the accounting period in the form of outlook or depletion of assets or increase in liabilities that results in decrease in equities other than those relating to distribution to equity participants.
Measurement of the elements of financial statements. Measurement of the elements of financial statement is the process of determining the monetary amounts at which the elements of the financial statements are to be recognized and shown in the balance sheet and income statement. A number of different measurement bases are employed to different degrees and in varying combination in the financial statements. Some of the bases which are used for the measurement are historic cost, current cost, realizable value, and present value. Measurement of the elements of financial statement is shown in the present figure. It is clear from the figure that measurement of elements mean assets, liabilities, equity, expenses, and income, can be done with the help of different bases, and the main bases which are available for measuring the financial statements or elements of the financial statements are historic cost, current cost, realizable value, and present value. What is the meaning of historic cost? Assets are recorded at the amount of cash or cash equivalent paid or the fair value of the consideration given to acquire or purchase assets at the time of their acquisition, and liabilities are recorded at the time of proceeds received in exchange for the obligation. So according to historic cost basis, assets should be recorded at their cost at which they are purchased, and in similar manner liabilities are or should be recorded at the cost or proceeds which are received in exchange for the obligation. Current cost. Assets are carried at amount of cash and cash equivalent that would have to be paid if the same or equivalent asset were acquired currently. Simply it means that what should be the amount which we have to pay to acquire the assets currently. So according to this base, assets should be valued at the current cost of these assets. Realizable value. Assets are carried at the amount of cash or cash equivalent that could currently be obtained by selling the assets in orderly disposal. It means assets should be valued at the price or amount which can be obtained by selling them in orderly disposal. Present value. Assets are carried at present discounted value of the future net cash inflows that the firm is expected to generate in the normal course of business.
Now, why financial statements are significant to various parties? The financial statements are mirror which reflects the financial position and operating strength or weakness of the concern. These statements are useful to management, investors, creditors, bankers, workers, government, and public at large. The utility of financial statement to different parties is discussed in detail as follows.
Significance of financial statements to different parties is shown in the present figure. This figure shows that the financial statements are very much important to management, long-term creditors, bankers, present investors, government, trade associations, stock exchange, tax authorities, and public. All these are the users of financial statements. With the help of these statements, these parties will get useful information which they can use for making various important decisions related with the organization. Or with the help of these information, These information assist these persons or these parties for making various important decisions regarding the business.
Management. The financial statements are useful for assessing the efficiency for different cost centers. The management is able to exercise cost control through these statements. The efficient and inefficient sports are brought to the notice of the management. The management is able to decide the course of action to be adopted in future. Long-term creditors, for example, supplier of long-term loans. The trade creditors are to be paid in short period. This liability is met out of current assets. Creditors will be interested in current solvency of the concern. The calculation of current ratio and liquid ratio will enable the creditor to assess the current financial position of the concern in relation to their debts.
Bankers. The bankers is interested to see that the loan amount is secure and the customer is also able to pay the interest regularly. The banker will analyze the balance sheet to determine financial strength of the concern, and profit and loss account will also be studied to find out the earning position. A banker has a large number of customers and it is not possible to supervise their business activities. It is through the financial statements that a banker can keep a watch on the business plans and performance of its customers. These statements are also help the banker to determine the amount of securities it will ask from the customers as a cover for the loan. So these statements are very much significant to bankers as they provide the information whether their loan amount is secure or they will able to get the interest regularly, or what amount of securities they should ask from the customers. These are the questions, the answer of which is provided by the financial statements. Present investors, for example, equity shareholders. The investors include both short-term investors and long-term investors. They are interested in the security of the principal amount of the loan and regular interest payments by the concern. These are the two main concerns of an investor, that his principal amount should be secured, further able to get interest on regular periods. The investors study the long-term solvency of the concern with the help of financial statements. The investor will not merely analyze the present financial position but will also study future prospectus and expansion plans of the concern. The possibility of paying back the loan amount in the phase of liquidation of the concern is also taken into consideration. In simple words, present investors need information to judge prospectus for their investment and to determine whether they should buy, they should hold, or they should sell the shares or debentures of a particular company or organization. So, investors, the financial statements are very much useful. The base of their decision is financial statements. They analyze the financial statements, only then they make the investment decision. Government. The financial statements are used to assess tax liability of the business enterprises. The government studies economic situations of the country from these statements. These statements enable the government to find out whether business is following various rules and regulations or not. These statements also become a base for framing, amending various laws or regulations of the business. Trade associations. The trade associations provide service and protection to the members. They may analyze the financial statement for the purpose of providing facilities to these members. They may develop standard ratios and design uniform system of accounts. Stock exchange. The stock exchange deal in purchase and sale of securities of dissimilar companies. The financial statement facilitates the stockbrokers to judge the financial position of different concerns. The fixation of prices for securities, etc., is also based on these statements. Tax authorities. Tax authorities need information to assess the tax liability of enterprises, and this information is provided by the financial statements. Public. Enterprise affects member of the public in variety of ways. For example, enterprise may make a substantial contribution to the local community in many ways, including the number of people they employ, patronage of local supplier. While all the information needs of these users cannot be made by financial statements, there are some needs of the investors or provider of risk capital will also meet most of the needs of the public.
True, financial statements are appropriate and useful for the concern. Still, they do not present a final picture of the concern. The utility of these statements is dependent on leading a number of factors. The analysis and interpretation of these statements should be done very carefully. Otherwise, confusing conclusions may be drawn. The financial statement suffer from the following limitations.
The limitations of financial statements are given in the present figure. It is clear from the figure that financial statements are interim reports. They do not provide accurate position. They provide historical information. The impact on non-monetary factors. The factors which are not monetary are ignored. Lack of accuracy. These are static statements, and these statements are influenced by the personal judgments. Now, these are the limitations of the financial statements.
Interim report. These financial statements do not provide a final picture of the concern. The data given in this statement is only fairly accurate. The actual position can be determined when business is sold or liquidated. However, statements have to be prepared for dissimilar accounting periods, normally 1 year, during the lifetime of the concern. The costs and incomes to be apportioned to different periods, either a view to resolve profits, and the allotment of expenses and income will depend upon individual judgment of the accountant. Contingent liability and assets also make these statements imprecise. So financial statements do not give final picture. They are largely interim report.
Do not provide accurate position. The financial statements are expressed in monetary value, so they appear to give final and accurate position. The value of fixed asset in balance sheet is prepared on the presumption of a going concern. The concern is expected to continue in the future, so fixed assets are revealed at cost less accumulated depreciation. There are certain assets in the balance sheet such as preliminary expenses, goodwill, discount on issue of shares, which will realize not anything at the time of bankruptcy, through they are exposed in the balance sheet. Historical information. The financial statements are arranged on the basis of historical cost or original cost. The value of asset decreases with the passage of time. Current price changes are not taken into account. These statements are not prepared keeping in view the present economic conditions. The balance sheet loses its significance of being an index of current economic realities. Similarly, the profitability shown by income statement may not represent the earning capacity of the concern. The increase in profits may due to increase in price owing to some abnormal causes, not due to enhance in efficiency. The conclusion drawn from financial statement may not give a fair picture of the concern. Impact of non-monetary items ignored. There are certain factors which have bearing on financial position and operating results of the business, but they do not become part of these statements because they cannot be measured in monetary terms. Such factors may include reputation of the management, credit worthiness of the concern, sources and commitment of purchases and sales, cooperation of the employees. Thus, financial statement only shows the position of financial accounting for the business, not the financial position. Lack of accuracy. The lack of accuracy of financial data is not possible Because the statement deal with matter which cannot be precisely stated, the data are recorded by conventional procedures followed by here various conventional postulates, personal judgments are used for developing the data. Influenced by personal judgments. Financial statements and conclusions are influenced by biasness derived by the accountants themselves. For example, depreciation method, valuation of stock, writing of deferred expenses depends upon the personal judgment of the accountant. The rationality of such decision depends upon the experience, ability, honesty, objectivity of the accountant concerned. Thus, the financial statements are biased and results from them are also biased. Static information. The financial statements are static in nature, that is prepared at the point of time. They do not present the process by which figures are arrived at. Thus, their static nature limits the importance of analysis also.
So students, let us now summarize what we have learnt in this module. Financial statements are prepared primarily for decision making. They play a dominant role in setting up framework for managerial decisions. The information contained in financial statement should be such that a true and correct idea is taken about financial position of the concern. Through financial statements are appropriate and useful for the concern. Still, they do not present a final picture of the concern. The utility of these statements is dependent upon number of factors. The analysis and interpretation of these statements should be done very carefully. Otherwise, confusing conclusions may be drawn. Thank you.